Hey, what's up, everybody?
What's up, everybody?
This
What's
your
up?
boy, Stocking with Profit Peeps, aka Stock Mark, aka Mark Peeps, whatever you want to call me. I'm here with the beautiful children. It's very important that I let y'all know that you have to teach your children about the stock market, the value of investing. And before I go forward, because we in the middle of getting our oil change, but I want y'all to bump and grind against that like button, baby. Bump and grind against that like button, share the video, subscribe, okay, and
Comment.
let the notifications accelerate, and put some beautiful comments down there. I want everybody to know that it's different types of investments that you're able to make, and you're able to put your money involved and allow and see grow, okay? We got the ETFs, index funds, okay? ETF stands for exchange trading funds, okay? And then we got the index funds, which is the Dow, okay? We have the S&P 500, and we have the NASDAQ, okay? I'm gonna explain to you these, with the receipts that I'm about to show you, okay? So you can know for yourself. I don't wanna misconstrue anything according to what you may understand amongst my explanation, all right? Dow Jones, or more precisely, Dow Jones and Company, is one of the world's largest business and financial news companies. Charles Dow, Edward Jones, and Charles Bergstresser formed the company in the 19th century. Besides the famous Dow Jones Industrial Average, the company also created various other market averages. Who is Dow Jones? Dow Jones was not a single person, but two of the three people who founded Dow Jones and Company in 1882. Charles Dow was the Dow and Dow Jones. Edward Jones was the Jones, and Charles Bergstresser was the company's third founder. In 1889, they went on to found the Wall Street Journal, which remains one of the world's most influential financial publications. The S&P 500 index, or the Standards & Poor 500 index, is a market capitalization weighted index of the 500 largest U.S. publicly traded companies. The S&P is a float-weighted index, meaning company market capitalizations are adjusted by the number of shares available for public trading. Why is the S&P 500 so important? The S&P 500 tracks the prices of large capital U.S. stocks, or stocks of companies whose total outstanding shares are worth more than $10 billion. By following the S&P 500, you can easily see whether the largest U.S. stocks are gaining or losing value. The National Associations of Security Dealers Automated Quotations, NASDAQ, was initially an acronym for the National Associations of Security Dealers Automated Quotations. On February 8, 1971, the NASDAQ stock market began operations as the world's first electronic stock market. At first, it was merely a quotation system and did not provide a way to perform electronic trades. Now, this is Exchange Traded Fund, ETF. An Exchange Traded Fund, ETF, is a basket of securities you buy or sell through a brokerage firm on a stock exchange. 5 types of ETF stocks. ETFs dominate market. ETFs may trade like stocks, but under the hood, they more resemble multiple fund and index funds, which can vary greatly in terms of their underlying asset and investment goals. Below are a few common types of ETFs. Just note that these categories aren't mutually exclusive. For example, a stock ETF might also be index-based, and vice versa. These ETFs aren't categorized by management type, passive or active, but rather by the types of investments held within the ETFs. Stock ETFs, these comprise stocks and are usually meant for long-term growth, while typically less risky than individual stocks. They carry slightly more risk than some of the other listed here, such as bonds ETFs. Bond ETFs, unlike individual bonds, ETFs don't have a maturity date. So the most common use for them is to generate regular cash payments to the investor. These payments come from the interest generated by the individual bond within the fund. Bond ETFs can be an excellent lower risk complement to stock ETFs. International ETFs, foreign stocks, are widely recommended for building a diverse portfolio along with U.S. stocks and bonds. International ETFs are an easy and typically less risky way to find these foreign investments. These ETFs may include investments in individual countries or specific country blocks. Sector ETFs. The U.S. stock market is divided into 11 sectors, and each is made up of companies that operate within that sector. Sector ETFs provide a way to invest in a specific company within those sectors, such as the healthcare, financial, and industrial sectors. These can be especially useful to investors tracking business cycles, as some sectors tend to perform better during expansion periods, others better during contraction periods. Often, these typically carry higher risks than broad market ETFs. Now, the last one, commodity ETFs. Commodities are raw goods that can be bought or sold, such as gold, coffee, and crude oil. Commodity ETFs let you bundle these securities into a single investment. With commodity ETFs, it's especially important to know what's inside them. Do you have ownership in the fund physical stockpile of the commodity, or own equity in companies that produce, transport, and store these goods? Does the ETF contain future contracts? Is the commodity considered a collectible in the eyes of the IRS? These factors can come with serious tax implications and varying risk levels. So, hit the like button, subscribe. Okay, I'm not going to hold y'all. I'm going to be brief. We in traffic. We getting the oil change. I want to say much love to y'all. Be safe out there. Keep positive energy. Keep the negative away from you. Your boy.
Let us know what you think about the receipts in the comments.
All right.
Peace.
Peace.